What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. If that sounds like something you're interested in, consider subscribing, as I do also provide some technical analysis for entries and exits on stocks that I am looking at, and I also provide a daily pulse on the market at Hemi137 on X as well. But before we get started, remember to hit that like button and let's dive right in as we are looking for a recap of the previous week and how we can navigate or use that information to move on to the next several weeks. So, recap, we have a lot going on in general. I tried to condense it to some extent here just so I have specific talking points, and I'll kind of talk through all these points, and then we'll lead into the earnings calendars. We still have a couple good weeks of earnings before all the industry leaders report, and then the market will kind of make its decision from that point and make the move from there. So, with that being said, monetary policy came in this week on Wednesday. Wasn't expecting any kind of adjustments to the rates, and that's exactly what happened. And then we had Powell immediately following after that at 2:30. He came out. He started fielding a lot of questions, and again, he wasn't hawkish nor was he dovish. He was very neutral in a lot of his stances, and he wanted to see how essentially these executive orders that Trump was executing. He wanted to see how the market's going to interpret that, how inflation is going to react. So they're very much more so in a very reactionary state. Now, just before Powell had come out, Trump did come on the horn and he said that the Fed essentially needed to start cutting rates because he's well aware of the fact that unemployment is sky high and the fact that we are in a stagflationary state. And what he's trying to do is reduce the spending. Over time, you will see that the inflation will come down, hopefully. And then again, these rates will need to be cut so that, again, we can get workers back in the workforce and these companies can start hiring again. But the problem is the Fed are reactionary. So they wait way too long till things essentially crater before they actually take any action. Because again, they're not going to preemptively adjust rates when things are quote unquote strong and resilient, yet unemployment numbers are sky high. So we had that on Wednesday. We've also had some great earnings. Apple came out with earnings. They did surprisingly well, but again, they're not innovating. And again, the forward guidance is uncertainty, so that's not great. Microsoft came out. I mean, a lot of these are barely beating, and there's concerns about the future, especially with the cloud space, because of the fact interest rates are so high. People can't take out business loans. They can't keep developing at this point. Right now, a lot of even these big tech companies are in survival mode at this point. So one, you have the infrastructure for all this AI, but the problem is that you need to the AI isn't where people are expecting it to be. It can take some low level jobs, but it's not going to take over everybody. Not just yet. You're gonna have time before that even comes close to that. So then Tesla also reported they had a double miss. They held their price though of the forward outlook. Elon came on and was very much pushing robotics, and FSD is supposed to come out in June. That subscription in Austin, Texas. But another big thing is their energy. I've been talking about the energy for a couple of earnings statements, but their energy is growing at a ridiculous rate. I believe it's sitting at 125% a year. So their energy storage is rapidly increasing as, again, the need for energy in AI is needed very much so moving forward. So, and then Meta did extremely well, but again, the cloud space, Llama models, the concerns about open deep about they were really concerned about how that might actually impact the markets. The market was really kind of listening to all these big tech firms kind of talk about OpenSeek, and what they were really, how innovative they actually were. They did a lot of things that they weren't supposed to. Obviously, it's China. They're not going to abide by the rules. They did make it somewhat cheaper, but it wasn't as cheap as they initially came out with headline news. So that was interesting to see. And then you add UPS. Now they are, I believe, parting ways with Amazon and reducing a lot of their essentially um, partnership, because ultimately Amazon is doing kind of doing their own thing, and their UPS is having to close more locations as well. So UPS again with another horrible earnings, and again that heavily reflecting on where the consumer is right now. The consumer again is in extremely horrible shape. So watching that wasn't really good, but the market just kind of went flat. The market didn't really do a lot this week. It's trading sideways. The market is really waiting for something else. I think the market is just waiting to turn over. It was a hard push trying to go into this earnings, which is surprising, especially because it was supposed to be one of the biggest earning quarters of the year, and it's just not. We're just not seeing that. And the fact that this whole UPS thing makes us wonder what's going to happen during Amazon earnings next week. So again, the market, it's not going to really make a huge move until it gets information from Amazon and information from Nvidia, and then it will kind of make it move from there. And again, this is one of the weakest times of the year coming into March for the market. The market typically sells off, so you need to keep that in mind. Now, here on Friday, I'm recording this Friday evening. Canada, Mexico got slapped with a tariff of 25%, and China with a 10%. Trump is saying it's the fentanyl that's coming through. Obviously, there might be something more than there, but ultimately, he's trying to secure the borders, and what he's doing is trying to keep his promises kept. So he's been already executing on a lot of those already. He wants to continue to try to do that, and he's continuing to push not only the tariffs, but getting rid of the IRS. In that, if we can use tariffs and reduce our spending, is it possible? And you have Elon Musk that's backing him and say by 2026, it very well could be possible. So they're cutting a lot of programs, they're pausing a lot of the things to see what is absolutely necessary before they start doing anything. Which is interesting to see. So we'll see if it's true, if they can turn this thing around. Again, they reached out to Javier Milei, and he essentially reduced tons of government spending to try to really determine what was going on, and he made a 180. So that is very much what we're doing. We're taking that into account and try to change that as well. So very interesting to see. And then those tariffs, yes, you could be paying some of that cost that's coming in from the tariffs, but ultimately, if you aren't paying any taxes, it's only a fraction of what you would pay in taxes. So again, it's a better deal than what you're currently getting. Now, record number of consumers are making minimum credit card payments. So this is something we're seeing. Again, still a very, very weak consumer. So much so that Americans spent over $113 billion on lottery tickets last year. That's even more than books, tickets to shows, movies. People are trying to get out of the situation they can. So they're hoping that for some way they can come across some crazy amount of money to pay off all their debts, because things are wildly out of control. Their credit cards are going sky high. Credit cards increased about 50% over the past year as well. So things are just are not great. And again, the homelessness has also grown about 18% over the past year as well. So you have to take that into account, because grown parents are moving in with their parents, and then this bigger generation, the largest generation of the working class, is retiring here over the next 5 to 6 years, and that's just not going to happen with the amount of inflation that's currently going on and all these other issues that were occurring. So very, very interesting state. And despite all that, the market is still trying to push to all-time highs. So with that being said, we also do have upcoming this week, we have the non-farms, which is going to be big. There's a lot of other events going on, but again, I'll only report the ones that I think are going to have the most weight. Non-farms, obviously, if we start seeing changes there that can force the Fed to start taking action. Again, the Fed are very reactionary, so the things will get a lot worse before they get better. That's something you need to keep in mind there. And then with that being said, monetary policy, we just had monetary this past week, so the next one won't be till March 19th. Then that will have the summary of economic projections, which tends to move the market just a little bit more. And then on February 12th, core inflation, that will be very important, because now we're starting to make adjustments on our spending. So we'll see if inflation starts to come down. If inflation starts to come down, then the Fed are going to have to definitely start cutting at a rapid rate. We have to wait another month. So that's what Trump is trying to be preemptive on that. But again, the Fed are reactionary. They'll wait till the data occurs. And by the time the data is actually showing that, it'll be too late. So that is the worry and the concern. Earnings, we'll review the calendar like we always do, especially in the first half of the earnings. And then once we get past NVIDIA, then we'll start dying down on going over the calendar, because again, it continues the remainder of the quarter, but they don't hold as much weight in the market. So now expected moves, again, the SPX is priced in a lot this week. It could be because of non-farms, but ultimately there's still some other really big earnings that could sway the market. Most of them, again, for the 6 heavily weighted stocks have already reported. So now you just got the 2 more in Amazon. And actually, I believe Google hasn't reported either. And you also have NVIDIA as well. So Tesla has died down a little bit, but it's still very high because Tesla's been very volatile, especially robotics and everything. So it's still pricing in a lot. Boeing's about the same. And JP Morgan's, again, a little bit higher this week. So again, you got to remember there's still bank earnings that are being reported. You're running the risk of potentially starting seeing bank failures, and so a lot of these smaller banks. So that might be something that starts getting reported, so that you could see that number staying a little bit more elevated than it typically is. So with that being said, shout out to Earnings Whisperer. As always, we are looking to see what we are going to do here moving forward for this next week. So this next week, we're really looking at Palantir is a big one I want to watch. Again, they have one of the best use cases for AI. So do keep that in mind. I want to see what they're doing. But again, I think they're very overextended right now. I do believe they need to dial back. So we do want to wait on that, but still very good to be watching there. Then we got PayPal as another good one. I've been talking about PayPal a while, since it was like in the 60s. Now it's up near the 90s, 100 now. Spotify is a great one to watch as well. And then we also got AMD is going to be a big one. I've been talking about this one for a while. They could start really turning around. And then Google here as well this week. So we will have a big week this week as well. Some of these other ones, not really concerned. Uber is another potentially big play there. A lot of people do like Uber, but that can be really conflicting with Tesla there. So we have to watch for that. ARM is still very good. I do want to watch that moving forward here as well. Although it's very extended, this is the company NVIDIA tried to buy out for smaller chips, but again, it was dismissed because it would have been essentially built a monopoly, so they stopped that real fast. Then, of course, Amazon is something really big. We do want to see there, holds a big weight in the index, so do want to keep an eye on that one as well. ELF, again, with the tariffs and stuff, a little concerned about that, but I do want to keep this on the forefront and see how well they do in earnings. If they do well, it could be a buy the dip moment, so definitely keep that in mind. I do believe, again, they still have a lot of strength, and their growth rate is still very good. Even if the tariffs do start to play on this a little bit, I think they can still do very well moving forward. And Affirm, of course, because especially over this past the holiday season, I think Affirm is going to be extremely important because they are buy now, pay later, and they're integrated with a lot of these, like your Amazon and Shopify's, and so expecting them to do well. I could see a major move for them this week as well. But aside from that, I think that is pretty much what we got. Again, this video, there's a lot going on, and we're going to continue to watch and see moving forward. Headline news over the weekend, we don't really know what's going to happen there as well. I think there's a lot that could potentially play out through the weekend, especially with Trump and Trump's massive actions and the tariffs. I'm sure we're going to hear tons about that over the weekend. That is going to make an impact in the market. And what you're seeing is the market's afraid to really take position because it's overextended. So we want to watch and we want to see what does occur moving forward. But it will be interesting from this point forward, and really liking the action taking place. But again, the market is kind of uncertain. I think the market wants to pull back, to be honest, but we're waiting for NVIDIA earnings. That's why I said it was kind of the anchor point moving forward. And that's why they extended it out like a month. We're about 3 weeks away from NVIDIA earnings. Once that's reported, the market will make its decision. If the market can't pump from here after this week, or even starting into this week, it's going to be largely concerning. And then that means that the market might want to sell off. And again, typically through the cycle, it typically does sell off. So just keep that in mind. But if you made it this far, go ahead and drop some of the tickers that you were watching this weekend. What's your insight? What's your thesis for the week? And drop a like. And I will see you guys on the next one.